In the past 48 hours, Microsoft has been making headlines in the financial news. Microsoft shares have rallied to within 2% of an all-time high, driven by improvements in its Azure cloud business and optimism around its artificial intelligence initiatives. Microsoft stock has risen about 16% in May, marking its best month in over 3 years. Analysts describe Microsoft as a titan of tech, with a diversified portfolio in cloud computing, software, and AI, which is boosting its market performance alongside strong recent earnings. Microsoft's leadership in AI was a major focus at its annual Build Developers Conference, highlighting the company's expanding role in the AI boom and its impact on market sentiment. At the Build 2025 conference, Microsoft CEO Satya Nadella announced new AI partnerships and tools. Microsoft revealed a more open AI strategy by hosting third-party AI models, including those from Elon Musk's startup xAI and Meta platforms, on its Azure cloud infrastructure. This strategic shift positions Azure as a neutral AI hub, supporting a broad ecosystem of AI providers. The company also introduced an AI-powered coding agent within GitHub Copilot, capable of handling software development tasks with minimal human intervention. This aims to accelerate development workflows significantly. In enterprise news, Microsoft and SAP have expanded their cloud partnership to accelerate the adoption of SAP's next-generation ERP software on Azure. This includes integrating SAP's Joule AI Assistant with Microsoft 365 productivity apps, allowing seamless flow of SAP business data and AI insights into Microsoft apps. Microsoft has extended its security tools to SAP's cloud environment and plans to offer SAP's Business Data Cloud on Azure later this year. Microsoft is also renegotiating its partnership with OpenAI, aiming to allow OpenAI to potentially launch an IPO while protecting Microsoft's access to cutting-edge AI models. Analysts are optimistic about Microsoft's long-term prospects, especially following the Build 2025 conference. Jefferies analyst Brent Thill reiterated his buy rating and raised his price target for Microsoft to $550 per share, calling it his top AI pick. The company's revenue is growing solidly, with Azure cloud revenue up 33% year-on-year. Microsoft plans to invest heavily in AI infrastructure with an $80 billion capital expenditure plan for fiscal 2025. Analysts project that AI-related revenue could exceed $50 billion by 2027. However, be caution about data access and governance issues and intensifying competition in cloud and AI. In regulatory news, Microsoft has finalized its acquisition of Activision Blizzard after a prolonged antitrust battle. The U.S. Federal Trade Commission dropped its case opposing the $69 billion takeover. The acquisition bolsters Microsoft's gaming portfolio, including franchises like Call of Duty and World of Warcraft. Microsoft's recent developments come amid a broader tech sector pivot toward AI. Cloud providers and enterprise software firms are integrating generative AI into their offerings. Microsoft's strategy of openness, supporting multiple AI models and partners, aims to differentiate Azure as an AI-friendly ecosystem. The market sentiment around big tech and AI remains largely positive, with optimism that advancements in AI will drive new growth in tech. However, analysts and investors are monitoring factors such as interest rate trends and global trade policies. Overall, Microsoft is making significant moves in AI and cloud services, reinforcing its long-term strategy. Analysts agree that Microsoft's bold AI bets and solid fundamentals position it well for the future. With regulatory uncertainties resolved and a clear focus on leading the next wave of tech, Microsoft remains a key player to watch in both the stock market and the broader technology landscape.